learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in on October 15th, 2020, and this is the most important earnings season for the stock market. Today showed us a lot. Today was a very interesting and weird day. Have a lot of different things to talk about underneath the surface, but what you saw was a very, very steep drop in the morning after running up, but it was all because of the bank earnings. So this gives us a pretty big signal considering the size of the banks, and then we have a lot of tech companies coming, and we also had stimulus news today, but it really wasn't enough to set everything overboard. So we have a lot to talk about. The week is almost over. I think Friday is going to be interesting, but as we enter that new week and the new set of earnings, it's going to be crazy. So I got the plays, I got the keys, everything else. I even have one specific play I really, really like. We're going to go over some credit spreads, but also an option purchase. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free $99. It costs you nothing to join. YouTube.com/the stock market. You can post the plays, see the plays, watch the watch list come to life. And yes, if you're interested in theological discussions ranging from the 18th to 19th centuries and what that means for thy life and how thee can apply thee to thy finances with thy chest to the sun, then we are the place to be. And the most important thing you need to do, post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything, post them below and source that info. Shout out to Chad, baby. So right off the bat, first thing, like we said, there was no stimulus. That was actually the update. They said no stimulus before election. That's what Mnuchin said, but he was getting a little bit frustrated. So we saw Trump with the economic thing. It sounded like a rally today, but there was an exclusive interview with Mnuchin today. It wasn't really government sanctioned, and you got a different vibe from him, and it leads to some other things I'm going to talk about here. But he said we're not going to get a deal, but then shortly after, like clockwork, Larry Kudlow kind of tries to walk back the comments and says he doesn't want to walk away. But the key to all of this, and this is why I'm saying I think earnings is going to be really, really crazy, is because the markets reacted very little to this. So there was some response, but it was hard to really correlate it with timing even throughout the day. It was really an interesting day. We were talking about it because some of these drops, when we were hitting these lows, they occurred very, very quickly and were somewhat large considering we didn't have a really sizable gap up, which we've been seeing the last few days. So what this is telling us is that the stimulus is not as important. Again, we've talked about this a lot, even on stream. However, now this is a somewhat sizable move considering you had still earnings run-ups and other stuff happening, but it's clear that earnings in one set or even two sets of bad earnings in industry, it's going to have an effect. So now when we start getting towards next week in some of these higher weighted companies, doesn't mean that it has to be bearish, but you're going to see bigger moves. And this earnings is going to be just very, very pivotal coming into one of the final quarters, or at least that you will be able to trade for the end of the year. So like I said, the main thing is going to be watching these earnings, and even now this could set up plays, but a lot of today was simply because of the bank stocks. I feel like I should also mention that we did have some of that weirder vaccine news and kind of a little amount of updates on that, but we want to see a real pricing shift for that to tell us something. But those are the first two things. And then finally, there was some news. It's kind of related to Mnuchin. I think this is going to be very, very important, especially coming into the end of the week. But watch for some China trade tensions, maybe even a gray swan, or it's going to gray swan us where an old problem that was a black swan may come up and it could still surprise us, but it's not going to have that same OMG effect on the markets. But yesterday was the 5G thing with Apple. You saw that reaction from China. Again, there was that competition. Today, you heard Mnuchin kind of clapping at him at the thing, and then there was also a report that we're adding one of Baba's like IPO companies to a potentially blacklist. So considering even the election coming up, I mean, a lot of people talk about Russia, the election. I would not be surprised to see China pop up here before the end of the year. So keep your eye on that. It is going to be Thursday. This is kind of usual and slow, but not slow coming into the biggest week of earnings. So I hope you're ready, but that is pretty much it. So let us get into the plays. So right off the bat, we have a few. A lot of people even asked about this. I will go over 2 credit spreads that we made, and then I will go over a credit spread or a frog, considering its move. It is really something you could decide depending on your sentiment, but one of those plays is going to be BIDU. This could be a potential credit spread because it moved up 7% today. I don't know why. If someone posted a reason, but it was a very surprising move. However, when stocks make big moves like that, it makes them good potential candidates to find either a frog or take advantage of the premium shooting up in one direction and getting good credit. So BIDU is going to be the first play I'm going to watch. And then finally, I will go over these 2 plays. We will outline these and explain them a little bit. You'll see the ones. We still have to go over the DraftKings play, but the other play I really want to watch, I did do a credit spread on them, but Disney, I really, really like it. I have the calls yesterday. They were down about 20%. I sold a bigger credit spread position on it, so I'm going to use this now as my starting position. Depending on how it moves from here, I will either average down or not, but I like Disney for the upside, so that's why I bought both contracts with a little bit of time, and then I got a credit spread on the put side so I could make money. I'm overall bullish, or maybe a neutral bullish, but more so bullish on this company. And why I'm bringing that, the news was 2 days ago. They're switching to this whole growth model. They say they want to plan to do the dividends and keep them there, but it really, really reminds me a lot of the first announcement of the Disney Plus, and then we got the numbers where you kind of got the pop, sell off for a little bit, and then I wouldn't be surprised to see some follow-up info, and that follow-up info is going to be them reinstating the dividend. I think that would be enough to send this thing going crazy. So I like it. I'm already set up in calls. I'm already set up on the put spread, but what I'm going to do here is if it goes against me and gets cheaper, I'm going to use those as opportunities to kind of build a decent-sized position to see if we get some sort of back to normal valuation or above valuation if they bring the dividend back, and then now this whole new growth model. So I just overall like it. We're going to keep watching that. I'm already in that play. The first call's down 20%. But now as far as the credit spread, you guys can see here, this is the last play I made today. So we did the Qualcomms first, and we talked about this because there's many different options on this that you could take advantage of. Options in the sense that you don't have to take the same collateral trade. So here it is in the portfolio. This required $10,000 of buying power because I sold so many contracts, but also because the distance between the strike prices, that determines the collateral. So this play, I shorted 15 of the 122 puts and bought 15 of the 115 puts. So it was a $7 difference between these strike prices. That means every contract has a $700 risk. Since we got about 50 cents, 47 cents, your real risk is $650 per contract. So times that by 15, that is about $10,000 worst case scenario. And that's if Disney by next week ends up below 115. Now, how would we win on this? As long as Disney stays at 122 or higher by next week, I will make $705 because that's how much credit we collected. 47 cents a contract, 15, about $700. If we even got about 50% of that, which is kind of usually our target, I would walk away with like $350. So I kind of like that trade. Again, you guys see the reason why I'm very bullish. Not only do I have the calls, I just sold puts. So if it goes down, I'm screwed. So if I'm very right in my conviction, I'll get paid for it, but you could see this is kind of different than some other plays. I usually just don't go all in on something, or at least we account for it. So I'm using this first position to kind of set me up, but we are exposed to the downside, if anything. So that's the first play. The second play was Qualcomm, and again, this is the nature with all of these. You could do this play. You could have done the Disney. You don't have to do 15 contracts. Even on one contract, you could have lowered the difference between the strike prices. You could have done even up to a $1 difference, $100 to make this play. You would have made probably substantially less credit, maybe like $5 in credit instead of 47. However, we talked about this, and y'all should look into the credit spreads. But that was the first play. The second play, Qualcomm, I feel a little dirty coming after it because this is that play that almost screwed us last week. So you guys remember last week we had a similar Qualcomm play and it kept shooting up. We actually walked away with a profit because we did the smash and grab average down. But the key you got to see here with this and the logic of why I'm playing it is because they shot up. The contracts were all at a premium on the weeklies. They were all up 90%, 60%, even some upwards of 300%. Would have been a great one to sell in the morning, but why do I like to sell the calls on Qualcomm and why I did it even last week, why I'm okay with doing it this week, even though it was a little dangerous last time, is because Qualcomm's not really a big mover. Now, the X factor would be 5G news and everything that we saw yesterday with Apple, but for the most part, the idea with this play is sell out the further out the money calls And my idea is saying I think Qualcomm could go up, but just not this high by the end of the week. So this is for Friday. I shorted the 135 calls. I did 20 contracts, and then I bought the 140s. $5 difference between the strike prices, $500 risk per contract. We got 25 cents. So your real risk is $475 per contract, still a lot. But we collected $500 credit. So by the end of this week, as long as Walmart stays below 135, or even tomorrow, if it really drops or it doesn't go up, we might be able to get 50%, could walk away with $250. So those were the plays that we made today. I even did a smaller one too. I did one on the Robinhood account. Wanted to give you guys a real-time example of kind of, how they would look and how you could do this with a smaller one. So I did the same Qualcomm trade with $20. So you would need $500 or $400 like we said to execute this trade. But as you see, you could get a decent credit, $20, $25 a week. It could add up on a decently sized account. So there's that. And then we got clapped today. Our AMC shares got clapped, but mainly Mr. DraftKings. So it was very, very crazy because you could see the chart when we sold it. It worked in our favor today. It came down. I was only down like 10% at one point, and then the stock got clobbered. So now we're down again. This is what I was telling you guys on a weekly expiration. That's why I'm saying, depending on what happens today, I said it could make or break it. In the morning, we were doing very, very good, but then it fell the other way. So now tomorrow, the final day, I would say, to decide if we're going to roll over because of the premiums, but we'll see the out of the monies, how they hold up. Because remember, the ones we bought, these are out of the money. So if these lose value, you're losing the value on the contracts you bought, your insurance, you're still down on these. I think these are still worthless even then. That's why that we're down so much. So we'll see what happens tomorrow. But now my plan is, if it keeps dropping in the morning, I'm going to go for the smash and grab. I'm hoping these contracts, I go down even more so I could simply just double down on them with less contracts. And then if it drops, hits a big sell-off in the morning and bounces up, we should be able to get out with less pain. Otherwise, if that doesn't work, I don't get that opportunity and it kind of stalls, I'm going to look to do the average down, and we'll push these into next week. But come on stream, you'll see it's been a very good one, but I'm glad you guys are getting to see this. A lot of emotions, and like I'm saying, you're getting to see at expiration, and hopefully you understand why it's gaining and losing value, because we shorted these 52, so it's falling in and out of the money, and depending on how much it falls in and out of the money, we're losing that much proportionately. So that's why Friday expiration is so key, and why it could be both so profitable, or it could really make you have bigger losses when you're doing these credit spreads. So that is going to be exciting. Those are the first plays we have. Everything else, again, I like those Disneys. I would watch BIDU, like I said. I think the fact it's moved so much could set up for a really good credit spread opportunity. Kind of like Qualcomm, where you could kind of say, hey, the calls are up, but it's not going to go that high, or wait for a Frogger if this does continue. But also that news we saw with China, I would watch it, and we'll see how that could be affected, or if anything of that nature comes up. Watch Apple. They had that event yesterday. Still kind of muted, like I said. Give it a swing trade, kind of like what we showed with the Disney chart. I think it's a little bit different, but I'm going to kind of wait for some of those events, sell off, and then the overall continuation to occur. That's what I'm going to be looking for. Watch UAL. They had earnings. We were going to sell a credit spread on this, but they had earnings. It kind of disappointed, didn't do much, so maybe those premiums might hang there in the morning. This might be a really, really good one to flip in the morning or take advantage of premiums. Then watch the value stocks, Walmart, McDonald's, HD. They got clobbered today. And again, with the banks dropping and everything, I thought this was very interesting. It caught my eye, considering they've either been moving or not. I guess McDonald's did a little bit better, but I think HD got really, really clobbered. Yeah. So it's kind of interesting to see the momentum of some of these growth stocks or the value stocks and where they've been at. So watch those. Watch the banks. Again, any sort of continuation, anything of that nature. Bank of America got killed. So did Wells Fargo, but Goldman Sachs and JP Morgan were the winners. So keep your eyes on both of those. And then finally, UNH, we got clapped on those. We could hope for a continuation, but we have next week. Again, it's a slow-moving stock. It might pop back up. There could be a surprise continuation, but for the most part, that play is probably clapped. So we will see. I wouldn't go too crazy trying to average down or not unless any momentum comes back, but we'll keep an eye on it. Then finally, TLT, GLD, UUP. I mean, they're very, very interesting. The one thing that caught my attention is how GLD, watch that related to China. You could see kind of the dollar and how they've reacted since that first run, but this is just reminding me and bringing me back to that one day we had not too long ago where I said bonds aren't moving, but then you started seeing the commodities move. If we catch up there, it's like another range is being set. So there is a huge push-pull effect. This earnings is going to be very, very important. There's a lot of money betting on both sides. So you could even see it with bonds, gold, everything. This earnings season isn't sweet in the sense that there is a lot of anticipation, and depending on how some of these initial reports can go and how some of these big companies play out, it will be very important. And some of the bigger global indicators are pointing to that. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember who's in control. If you're not happy about the cards that have been dealt, be happy that your card can get drawn next. And start asking questions and stop listening to the wrong ones. But the code loves you. I love you. And we'll see you in the morning. Let's go.